All attendees are in listen-only mode.
Welcome, and thank you for joining us for today's webinar entitled The Shanghai Free Trade Zone and Its Impact on China's Financial Services Industry, brought to you by Kapronasia. My name is Paul Robinson. I'll be acting as the webinar moderator. Few initiatives in the past couple of years have captured the attention of China's financial services community more than the recently opened Shanghai Free Trade Zone. Depending on to whom you speak, the zone will either be a bastion of financial industry reform or to be a mini Hong Kong, where bankers have saved the long-distance charges to Hong Kong, but not much else. With Citibank and DBS already making big bets in the region, it's important to understand the potential implications of investing in the zone. In this informative 30-minute webinar, we'll provide an overview of the Shanghai Free Trade Zone. We'll look at the current regulations and guidelines of the zone. We'll compare the Shanghai Free Trade Zone to other China Special Economic Development Zones. Now, we're also well aware that we're really not going to get a chance in this webinar to answer all your questions and give you all the information about this free trade zone. So if you do have questions, by all means, I'm going to give you how to interact with us during the webinar. But if we don't get to your question during the webinar, feel free to send your questions in to the folks at Kapronasia, and we'll be able to answer those questions for you individually. Now, I do need to inform you that today's session is being recorded and is run in listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. To facilitate this discussion, we'll use two features of the webinar software, which consists of two parts. The first is the viewer window, where you'll see the presentation, which I'd recommend maximizing now in order to see it in full screen. The second is the control panel, where you can interact with us. This control panel can be opened and closed by clicking on the arrow button on the Grab tab. In that control panel, you're welcome to submit questions and comments to our presenter. We'll be answering as many of these as possible throughout the presentation, and of course at the conclusion of the webinar too. Now, with our housekeeping out of the way, let's get started. Our presenter today is Victor Fan, who's one of Kapronasia's senior analysts. Victor's joining us from Kapronasia's head office in Shanghai. As one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, Kapronasia help clients understand and navigate the challenges they face in a region with a rapidly changing business, operational, and technological environment. So let's get this discussion started. Victor, go ahead, please.
Okay, thank you, Paul. Dear ladies and gentlemen, thank you for attending our webinar. As you know, that China has created what could be considered an economic miracle since the start of the reform and opening up policies in 1978, nearly 35 years ago. However, now the economic growth in China is slowing, and Chinese government is trying to find ways to keep the economy growing. Usually, China government-made blueprints and policies have tremendous power in Chinese markets. So the investors typically expect new stimulus from the government, such as setting up new reform regions. The Shanghai Pilot Free Trade Zone, or FTZ, Qianhai Special District, and the Wenzhou Financial Reform are the three biggest developments being talked about in China since 2010, when China implemented a national economic saving plan to fend off the financial crisis. Although there hasn't been much discussion of Qianhai Special District and Wenzhou lately, the announcement of the Shanghai FTZ has brought up the topic of other two zones again. Many see the Shanghai FTZ to be the answer to a lot of Chinese current challenges and issues, but it is a smart idea to look at the Shanghai FTZ in the context of other two regions, which maybe weren't promoted as much, but were designed to overcome many of the same issues. The reforms in the three regions have something in common, as they all involve financial reforms to some extent. However, there are still many differences between these three. In some way, the Chinese government tried two different approaches to reform that worked to a certain extent, but now they might be applying the lessons from the first two to Shanghai FTZ, where reform might stick. The webinar today is designed to give you an introduction to the key characteristics of each of the three zones. mainly from the financial reform perspective, and then make a comprehensive comparison between these three regions. Of course, as the Shanghai FTZ has just opened, we will spend some additional time going through the key characteristics of this zone. For this report, our findings are mainly based on secondary research, which includes internal knowledge, government institutions, media, and financial institutions' reports. The purpose of our report is to firstly introduce the policies and schedules for these three test beds with some examples, then figure out the problems and bottlenecks of these three types of reform. After that, identify potential solutions for the problems, and finally, we will compare and contrast among these three regions and identify the differences. Firstly, let's have a look at the Shanghai FTZ. Shanghai Pilot Free Trade Zone was authorized by the State Council in August 2013 and was officially opened on September 29, 2013. The Shanghai Pilot Free Trade Zone is actually not a new undeveloped area, but is rather the combination of three existing regions of eastern Shanghai: the Yangshan Harbor Free Trade Zone, the Waigaoqiao Free Trade Zone, and Pudong Airport Free Trade Zone, which combined have a land area of 28 square kilometers. These other zones are called free trade zones, as unfinished goods that are brought into the zone and exported from the zone can be sent overseas without paying any additional duties or taxes. An example is Lenovo, who often would buy parts from all over the world, then ship them to Shanghai, where they are assembled in a free trade zone. Those assembled Lenovo laptops are then shipped out of China to wherever their final destination is. Many people believe that because many of the products on the market today, from laptops to dolls, are made in China, so they must be cheap in China. It is actually the opposite. The Lenovo laptops, if it is brought from the free trade zone and imported in China, actually costs more in Shanghai than if it was shipped to US and sold there, mainly because of the high import taxes that China places on many different types of goods. Still though, for companies that mainly export, having a presence in the free trade zone gives them access to the Chinese labor market, but avoids any imports or export duties on goods that are not going to remain in China. So the main difference between the new Shanghai FTZ and the previous free trade zone is that not only does the Shanghai FTZ allow the free flow of goods, but the new FTZ will also allow the free flow of human and capital. The main targets of building the new free trade zone is to eventually help Shanghai to be the next international financial center, high-end service industry center, international trading center, and logistics and shipping center. The Shanghai FTZ is thought to be a portal of connecting the world with prevailing standard economic freedom. There are 6 major industries that will be contained in the Shanghai FTZ, including financial services, shipping services, business services, professional services, cultural industries such as film industry, and the social service industries. The most unique characteristic is the negative item management system. Negative item management system means for any items listed, firms should not participate in that activity, but for items out of the list, firms can do that without restrictions. For example, gambling is on the negative list, which means no companies can provide gambling services in FTZ. However, if the government wanted to open up the zone to gambling, they could just take it off the list. The old principle is called positive item management system, which implies that companies cannot do anything outside of what was on the list. From Kapronasia analysis, the negative item management list is a big step forward for innovation and opens up the or possibilities for foreign investors and firms. It also makes it easier for governments to take things off of the list as reform continue, and previously they would have had to add them to the list. So the negative list shows which companies can operate in Shanghai FTZ, but there are additional regulations as to what they can actually do. In general, they will be able to do more in free trade zone than they can outside. Future reforms for the Shanghai FTZ will likely include free exchange of Chinese yuan to foreign currencies, liberalized interest rates, favorable policies for logistics, shipping, and international trading in the finance. Here are some specific policies for financial industries, such as allow qualified foreign financial institutions to set wholly owned banks in Shanghai FTZ, potentially allow foreign third-party payment institutions to apply for licenses from PBOC, permit setup of foreign-owned credit rating firms, enable financial leasing companies to set up branches in the FTZ, possibly authorize a trial on free trade of Chinese yuan on Chinese yuan capital accounts, gradually allow foreign investors to invest in Chinese commodity futures market. And finally, there was mention of some form of tax incentives, which initially appeared on the original proposal for Shanghai FTZ, but this was eventually eliminated. We will talk about this more when we get to the Shanghai part of the webinar. Although the basic ideas and the reforms presented by the government and regulators looks very positive right now, there are some potential problems or negative effects that could come out of Shanghai FTZ. This would mainly center on the competition with other cities in China, especially Hong Kong. The first problem is the competition with Hong Kong. People may ask, is Shanghai FTZ designed to replace Hong Kong, or is that the government idea? Then the control of free flow of Chinese yuan between FTZ and non-FTZ area. So how will flow be controlled and managed? Could anyone just walk with a suitcase of renminbi into or out of FTZ? After that, competition from other cities applying for pilot FTZ is thought to be a potential threat. So what's the national government's approach to other pilot FTZs that apply? Will they only allow Shanghai to be the main pilot FTZ? Here are some opinions about the future of Shanghai FTZ. Firstly, the competition between Shanghai and Hong Kong as an economic and financial center seems to be inevitable, but saying that Shanghai will take Hong Kong's place may still be too early. The policies for Shanghai FTZ are not as aggressive and open as in Hong Kong. Besides, Shanghai pilot FTZ still has complementary effects to Hong Kong to a certain extent. Secondly, control measures of carrying Chinese yuan cross-border between the FTZ and the rest of Shanghai is thought to be strict. It seems unlikely for someone just to walk through with a suitcase of Chinese yuan into or out of the FTZ. In the future, nationwide economic policy support should be released among the same line as the Shanghai pilot FTZ, because Shanghai experiences are to likely serve as the testbed to eventually be spread to the rest of the country. So in general, continued liberalization and deregulation, as is now being tried in FTZs, will serve as a model for deepening economic reform in all of China's mainland, should be solution to problems in long run. Now we turn to the Shanghai section. Before the Shanghai FTZ was opened in the late 2010, the government identified Qianhai in Shenzhen as a special development zone where it planned on trying out new economic policies. Although the Qianhai Special Economic District in Shenzhen was thought to be the special district where all the reforms would happen, with the start of the Shanghai FTZ, the future of Qianhai is a little bit in doubt. Will it still be place of financial industry reform, or will Shanghai be where everything happens? Shanghai is located in the West Shenzhen with an area of 14.92 square kilometers. In August 2010, Chinese State Council approved the aggregate plan of developing Shanghai into a modern service center in Zhejiang Delta area. In March 2013, National Development and Reform Commission released the Industrial Access Catalog for Qianhai, which specifies 6 major industries to be developed in Qianhai. The current figure in August 2013 shows that there are more than 1,300 firms set up in Qianhai district, including 21% of which are foreign firms. The initial idea for Qianhai is to make a global center for financial and commodity market trading, supply chain management, and global wealth management industry. Also, similar to Shanghai, there are 6 major industries in Qianhai. They have finance, modern logistics, IT services, applied scientific services, professional services, and public services. Because of the location near Hong Kong, Qianhai's policies were mainly designed to connect the district to Hong Kong. For financial industries, the Qianhai policy focused on areas including drive cross-border Chinese yuan exchange and loans, and issue Chinese yuan bonds in Hong Kong, develop the PE industry in the region, increase the number of foreign-funded equities investment funds, lower entrance thresholds for Hong Kong financial firms under the Closer Economic Partnership Arrangement, or CEPA framework, and encourage foreign and local financial institutions to set up multinational, national managerial, or operational headquarters in Qianhai. Now let's examine the reasons for temporary abolishment of tax reduction policy mentioned in Shanghai section. On the original Qianhai proposal, the government and the regulators indicated that firms would be offered lower 10% to 15% corporate income tax. But recent news show that the tax reduction policy is less likely to be executed because the government wants to make the tax policy generally consistent with the rest of the FTZs, including the Shanghai FTZ, and in the future, potentially spread them nationwide. As mentioned above, the rollback might be a sign that other reforms that China has slated for Qianhai might be rolled back as well. Finally, there are also policies focusing on loosening employment and visa restrictions to encourage foreign talents to enter this room. There are also lots of obstacles, and the future for Qianhai is ambiguous. As mentioned about before, it is a little bit unclear what the future of Qianhai is now that the Shanghai FTZ has been set up. It will be one of the main obstacles for the zone in the future. In addition, many in Hong Kong see Qianhai as a potential threat to Hong Kong's positioning as a relative freer market. There are 3 main obstacles. The first one is unclear long-term government plans for Qianhai. So what will they do in the future, and how does it fit with Shanghai? The second obstacle is the lack of cooperation from Hong Kong government and firms. The companies there see Qianhai zone as a special as a potential threat and not a complement to some of the unique advantages available in Hong Kong. The third obstacle is that on the introduction of high-end talents, the policies and execution are relatively vague. So in general, we have to ask, could Shanghai potentially focus on the niche to keep its appeal to companies and the government? Now we turn to the Wenzhou financial reform sections. Wenzhou is known as one of the wealthiest cities in China and the source of many China's self-made millionaires and billionaires. One of the challenges in China, though, is the fact that bank lending is very limited and is typically directed to the larger state-owned enterprises rather than the small and medium enterprises, or SMEs. Because of this, many SMEs have turned to shadow financing and lending, or essentially lending outside of the bank system. Although this was happening across China, Wenzhou, because of its high concentration of SMEs and entrepreneurs, was a particularly hot area for shadow lending. Over the past few years, there have been a number of relatively high-profile defaults coming out of Wenzhou. Because of this structural SME lending weakness, Wenzhou has become a testbed for innovations surrounding solving SME financial difficulties. In March 2012, the State Council decided that a financial reform task field in Wenzhou. In November 2013, the Wenzhou government officially released the detailed rules and regulations for Wenzhou financial reform task field, including 12 basic principles. The 12 basic principles mainly related to the private lending and SME financing, such as standardize the development of private lending market, accelerate the development of new financial institutions such as microloan companies to support SMEs, develop professional asset management institutions, start the trial for local individual investors to invest directly to foreign markets, and the currency used is Chinese yuan. Develop local equity and debt markets, and strengthen local financial risk management practices. The Wenzhou Private Lending Service Center is an example of the reform that Wenzhou government and regulators have been focused on to help develop the SME lending space. The center was set up in April 2012 by the Wenzhou government and served as a platform for private borrowing and lending. This platform provides an important alternative channel for firms and individuals to finance at lower cost compared to non-bank lending. In the 1 year since the center was set up, the total transaction volume is 513 million Chinese yuan through nearly 1,500 separate loan transactions. Other intermediary agencies similar to this center will be set up in the future to further support such transactions. There are also problems for Wenzhou. Wenzhou is a relatively unique case and was really never meant to be the free trade zone similar to Shanghai or Shanghai FTZ, but it is an important testbed for reform in China. While Shanghai and the Shanghai FTZ might have some trouble developing simultaneously, the Wenzhou reform will likely continue regardless as they address the different needs of the market. There are some challenges in the market though. The first problem is that the policies have not been executed very effectively in the implementation stage. Secondly, market demand is still much bigger than supply, although nearly 500 million Chinese yuan has been lent. There's an estimated demand of nearly 1 trillion Chinese yuan in the whole Wenzhou market. SME credit risk is still a challenge, for there is no good measurements or assessment of credit ratings. After the introduction of the three regions, we have identified some differences among the three regions. The largest difference for Shanghai, Qianhai, and Wenzhou is the direction of reform. For Shanghai pilot FTZ, the reform covers finance, transportation, national trading, taxation, and management. And for Qianhai, the financial innovations mainly related to the wealth management industry and the internationalization of Chinese yuan. For Wenzhou, the financial innovations related to SME financing. From a scope perspective, Shanghai Pilot FTZ is meant to be a global platform, a true international financial, logistics, and trading center. For Qianhai, although the policies, innovations, and opennesses involve very forward-looking due to geographic reasons, it will likely be that Qianhai will be a portal to enhance Hong Kong and Guangzhou economic collaboration by attracting Hong Kong capital investments. Finally, Wenzhou's financial reform is more focused on helping the real economy, especially saving SMEs with shortages of financial channels. It is thought to be the test field for the further economic reform to save Chinese real economy. And from the relationship to Hong Kong perspective, Shanghai pilot FTZ will likely copy some of the functions of Hong Kong markets such as finance, national trading, and logistics. However, at the current stage, the policies and mechanisms for Shanghai pilot FTZ are still not as free as Hong Kong, and analysts doubt whether Shanghai can be as open as Hong Kong. The competition between Shanghai and Hong Kong also seems to be inevitable, but saying that Shanghai would take Hong Kong's place may still be too early. The Shanghai pilot FTZ is still complementary to Hong Kong to a certain extent. Qianhai has different relationships to Hong Kong because it can be seen from the policies made for Qianhai that main target is to attract Hong Kong's investment and enhance the collaboration among Shenzhen. Hong Kong and Guangzhou, the range of planned functions made for Qianhai is much narrower than Shanghai pilot FTZ and Hong Kong, which means they won't be a direct spread to Hong Kong. As Shanghai is also so close to Hong Kong, many high-cost activities in Hong Kong can be moved to Shanghai to make full use of the favorable geographic advantages of Shanghai. And for Wenzhou financial reform, it seems there is no direct link to Hong Kong. Eventually, we offer some recommendations for foreign firms and investors. For foreign firms and investors, the Shanghai FTZ seems to be the most sensible zone with trying to set up branches or make investments. Although many policies have not been executed yet or still within scheduling stage, taking early mover advantages or register a company or investment entity in the FTZ should be beneficial. Currently, many people, including Shanghai residents, are registering companies in FTZ. And these shell companies are not really doing business, but they have virtual location with FTZ and paying a certain amount of 4% rental every year, typically around. To entice investment, registration fees currently could be as low as 1 Chinese yuan, considering that those costs might rise in the future, both in terms of rent and registration fees. For Qianhai, as it also has beneficial policies for foreign firms and investors, it's also worth trying. For instance, as Qianhai has favorable policies for wealth management industry, registering there could enjoy related beneficial policies. And for Wenzhou financial reform, as it is not directly related to attracting foreign firms and capital, it might be less attractive for foreigners. However, the policies in Wenzhou encourage the overseas investment behavior for local civilians, so it could be a chance for foreign financial service providers to do something to help the local investor to invest abroad. Generally, all of the current published regulations for Qianhai and the Shanghai FTZ are vague, which means real and detailed reform will come later. Our feeling is that the details are vague for everyone. Just because Citibank is going in doesn't mean that they knew something special, but at least they take the early move advantage. China has a history of using special zone as persecutor for real reform, which is quite clear in the case of Shenzhen Special District, starting from a small quiet village to become a portal connecting Hong Kong and mainland China. So we have reason to look forward to potential progress in Shanghai FTZ, Shanghai Special District, and Wenzhou financial reform. Okay, that's the end of my presentation. Thank you for listening. At this point, I will hand it back to Paul.
Thank you, Victor. That's thanks very much for all the great information there. So as we mentioned when the webinar first started today, we're really only scratching the surface here. There is so much information and so many questions and thoughts that people are going to have around these free trade zones that we know that you're probably going to get in contact with us or need to get in contact with us once the webinar's over. So the email address for Kapronasia is down the bottom there. Just send an email off to research@kapronasia.com and then we'll get back to you with those questions as well. Now, we have, however, had some questions come in while Victor's been talking, so let's get through to those, and then, as we said, we're only going to run this for a few more minutes. We're just conscious of your time as well, but we'll go through a few of these and get these answered for you. So, Victor, the first question, this one's coming from Jackie, and it says, why have the tax rate reforms in Shanghai FTZ and Zhuangzi been cut recently?
I think as we discussed briefly in the webinar, the Chinese government wants to keep the consistency and stability of tax rates for the whole country in general. As Shanghai FTZ and Shanghai's experience and policies might eventually be spread over the whole country, the tax policies should also be consistent. So that is why the tax reduction policies have been taken up the time being.
Okay, thank you. Good. Just we got a couple more, and one of the questions or one of the comments that I had while the webinar was playing, it appears that we were having some problems with the slides not displaying properly, so we're actually going to be posting those on the Kapronasia website at the conclusion of the webinar. So if you were experiencing those problems with the slides not showing up, don't worry, you'll be able to get to them from the Kapronasia website. Now for Victor, the next question, this one comes in from Lawrence, and the question is, why are the obstacles for reform much larger than 35 years ago?
Well, I think that's an interesting question. It's mainly because that's as the initial stage of reform and opening up, few complete or systematic regulations existed. Then I think the reform was just like a trial, or as the leader said, across the river by filling the stones. Now, as the bridge is there, meaning that the current regulation system is relatively complete, officials are less likely to break the existing bridge and build a new one. So that's why the obstacles are larger today than previously. I think my answer could answer the questions.
Well, yeah, no, that's good. Thank you for that one, Victor. All right, look, we know we'll just take a couple more minutes of your time. We've got two more questions I want to get through, and then look, if we don't get back to them, if we don't get to them, we'll get back to you and I'll explain how we're going to do that shortly. So two more questions here, Victor. Next one comes from Sylvia. It says, why Shanghai is the first city to be authorized as a pilot FTZ?
I think Shanghai is the largest economic center in China and one of the most internationalized cities in the mainland. So it's therefore thought to be a symbol of China's economy. And Shanghai City is also the economic leader in the Yangtze River Delta region, which takes about more than 20% of the Chinese total GDP, even higher than the sum of the Circumbohai Sea economic region and the Zhujiang River Delta region. And Shanghai City's GDP takes about 22.5% of Yangtze River Delta region, which is also a big proportion. So realistically, there are no other mainland cities are more suitable than Shanghai to be the place for the test.
Okay, good answer there. And the last question, this one comes from, excuse me, from Rebecca, and it says, why are Wenzhou and Shanghai's financial reforms not so successful?
I think the problem with the reform in the two areas are mainly due to lack of implementation. For instance, the tax reduction policies were not actually implemented in Shanghai, which means one of the most attractive characteristics of the zone have vanished. And for Wenzhou, the demand of private financing is too large and the government instructions not enough for the reform. Then I think the bureaucracy and inefficiency in Chinese government is also an important reason which has slowed down the reform. And finally, political fights within different interest groups also make policy reform and implementation less aggressive and solid.
Thank you very much for that one, Victor. All right, as I mentioned, we've been busy answering many of the questions in the background, and I know that we were unable to get to a few of them, particular one that's in there from Jeffrey. So look, we'll get back to you individually if we didn't get to your question here today. So if you've sent them in and we haven't responded to you on this webinar, we'll get back to you individually as well. Now, as mentioned during the session, today's discussion was based on Kapronasia's upcoming report on the Shanghai Free Trade Zone and its impact on China's financial services industry. This report will be available as part of Kapronasia's subscription service. If you haven't already registered for this valuable service, we'll also be providing a link to do so in the email you'll shortly receive, thanking you for your attendance at today's webinar. Inside this email will also be a link to the recording we've been making of today's presentation. So that way, if you've missed anything or you want to listen again at your own pace, you definitely can. As I mentioned, we'll also be posting up the slides to the Kapronasia website as well. So once again, Kapronasia appreciates your time today and hopes you found the information helpful and informative. This concludes our webinar today. Thank you for joining us.